Time then to bring on board Vijay Bhambwani, who's the author and CEO of VSPLindia.com. He now joins us on the show. Good morning, Vijay. Good to have you with us. To begin with, tell us what are the key levels to watch out for on the Nifty as well as for the Indian rupee?
Where the Nifty spot is concerned, the bullish pivot for the session will be at 5,300 levels. As long as the Nifty remains above this level, the possibility exists of the Nifty going to 5330 or maybe 5350 on an intraday basis. On the flip side, the bearish pivot is at the 5280 levels, below which the Nifty can slide to 5250 or maybe even 5235 levels intraday before profit taking or even bear covering can stem the decline. As far as the USD INR is concerned, as long as the USD INR NSE July future stays above the 55.95 levels, which is somewhat of a challenge here, the upsides can be expected at between 56.10 to 56.40 levels intraday basis. On the flip side, a more likely scenario is that the USD INR July series will stay below the 55.80 pivot and therefore test the 55.40 to 55.30 range intraday, where fresh buying or even short covering can stem the decline.
Right. Vijay, what do you make of the technicals in the FMCG basket, specifically the likes of an ITC and HUL? Would you use any of the declines there to accumulate?
In the FMCG space, ITC and Hindustan Lever, particularly Hindustan Unilever, are showing signs of rapid profit taking. And because of this, the chart pattern is showing signs of weakness that might persist for the next few trading sessions. There is also a reason of the suspected deficient monsoons, which can actually spur some more sales or even short sales on these counters. Therefore, fresh buy decisions may be deferred by a couple of trading sessions till such time as accumulation or even stemming of the decline sets in, and then maybe fresh buying can be commenced.
Right, and on the gaining side, Unitech, Lanco and Adani Enterprises showed a very smart move. Do any of them look like convincing buys for you?
Yesterday we saw pockets of action in Unitech, Lanco Infra and Adani Enterprises, which have seen breakouts from their 10 to 20 day resistance levels with improved volumes. However, these shares are all high beta counters and cannot be really relied upon to basically swim against the tide. In case the overall broader markets do see declines, these stocks can easily surrender most of their gains in a hurry. Therefore, existing trading long positions, if any, may be nursed, but fresh long positions are not advocated, as I said, because of the higher risk factor involved.
Okay, in addition to that, two specific trades that you've identified for this morning?
Where fresh trading recommendations are concerned, I would like to buy HDFC Bank in the spot segment in small lots due to the extreme relative strength being shown vis-a-vis the broader markets and the stock making new highs, whereas the indices are at least 20% way off their peaks. So I would buy in the spot segment at 570 levels, hold the long positions with a stop loss at 566 mark, and expect to book profits at 578 or end of the session, whichever comes first. The second would be an even more higher risk speculative buy in the cash segment in DLF at the 203 levels with a stop loss at 201 and a profit taking target of 207 or end of the session, whichever comes first. Between the two, I think exposure on DLF needs to be much more smaller and curtailed as compared to HDFC Bank.
Right, and from the futures and the options side, what's the strategy that you would recommend?
In the future space, I would buy the July futures of Maruti at the 1180 levels. I would hold this long position with a stop loss at 1175, and I would expect to book profits at 1188 to 1190 or end of the session, whichever comes first.
All right, Mr. Bhambwani, we'd let you go on that. Thanks very much for joining in and giving us all those ideas for this morning.